Alright guys, so back with another video. If you're new, I'm Sankey and I've got an action-packed one for you because we will be talking about a Warren Buffett favorite play. I'm going to be breaking that one down for you. Then I'll talk to you guys about the overall market and the way I'm looking to navigate it over the next couple of weeks. But I want to kick things off by rewinding to yesterday's drop where I broke down fuel cell for you guys. That's ticker symbol FCEL from a fundamental perspective, because today we saw it move up 30%. Lo and behold, I had a couple of you guys sprint into the comment section. Sankey, you said fuel cell doesn't have good fundamentals. It's up 30% today. Ha 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 ha. So we need to take it back. What you guys need to realize, first of all, is any stock out there in the market can either be a trade or an investment. Now, with a trade, all you're looking for is velocity, momentum. You don't need fundamentals in that situation. I told you guys before, a couple of drops back, we had plays out there in the market that dropped down 99%, then to bounce up 50%, and then just to bounce down another 60%. Okay, so trades are everywhere in the market. All you guys need to do is a bit of technical analysis to hit on trades. However, I was speaking to you guys about fuel cell in the context as an investment play for a number of years, and that's the situation many people out there in the market find themselves in, and that's the part that flew over some of you guys' heads. Because if you're invested into a play, what you care about is the play holding on to its gains over time. No point being in a play invested into it if it's going to give up its plays constantly over time. And this is where fundamentals do matter. Plays can skip fundamentals for a week, a couple of months, a year even, but day of reckoning is coming. Fundamentals, they're like the grim reaper in the market. They will catch up to the play at some point. Now, this is where I say you guys want to detach the stock price from the business. Just because we saw that stock price move up today doesn't make it a good play. So when you guys see stocks running up, you don't want to go and flock to those stocks just because the price is moving up. That doesn't make it a good business or a good play. Likewise, on the flip side, when you see a play coming down, that doesn't mean you run away from the play because the price is coming down. Remember, the stock price isn't the business. So when I do these savage fundamental breakdowns, that's not to say that that stock can't go any higher or that's the highest price you are going to see for it. It's to get you guys vibrating on a higher frequency in this stock market game. That's going to allow you to identify best in class investment plays. That's going to make you heaps more money than whatever you do with that one play that I might have just gone ahead and crushed. So I'm going to give you guys an update on the market, because what we are seeing is that September effect that I gave you the heads up about a couple of weeks ago playing out in full effect right now. We have a lot of analysts coming out giving bearish views of the market, talking about corrections. Now what they're saying has weighting because a lot of companies are coming out with weaker guidance for the rest of the year, given the COVID cases and the supply chain issues impacting their business, amongst other things. Also got high levels of inflation still, and there's that looming Fed tapering decision. All of this is causing low market sentiment right now, and even the best of the best plays are riding the tide of the market. So you're seeing plays come down gradually on the daily at the moment. Now, this isn't a cause for concern for you guys, because we know that we are just getting quality plays at cheaper price points. But this is the way I'm looking to navigate the markets over the next couple of weeks. My focus is on plays that have great valuations, right? So I'm talking low price to earnings multiples below the average of the S&P. Also plays that have good track record of earnings but have a phenomenal guidance moving forward as well. This is going to give them every chance to finish out the year strong, despite the weaker market we are seeing right now. So those are the lanes that I'm moving in. If you guys want to get up on the plays as soon as we get into them, just make sure you tap into the Discord link down below. I'll see you guys over there. Alright guys, so I want to talk to you about Apple stock. It's been a big day for the company. They had their event, the launch of the iPhone 13. Now what normally happens around these big events is there's a muted reaction from the market. Often we see the Apple stock price coming down off the back of that. However, this is one of our long-term plays. It's been a good grower over the last couple of years. So it's one we always want to be on the lookout for entry. So I want to break down the play of you guys and show you a couple of price points that I am looking at, because I know some of you guys might be looking at entry right now into the play, given they're down about 5-6% from the peak that we saw, about $157. But I want to give you guys some price points that I am looking at so that you can use them as guidance for entry on the play, because I wouldn't pick them up just where they're at right now. So currently at 140 $8. You guys want to know the play is trending at their 50-day moving average. Now they've been on a momentum run over the last couple of months, well above that 50-day moving average, but now it's looking like they're going to break that 50-day moving average. If they do, you could see continued downwards pressure on the stock price. So that's why I wouldn't pick them up right now. The next level of interest I have on the play is at $145. So that was the peak, a significant peak the Apple stock price had in January. So this could act as an area of support for the play if they continue downwards. So I want to see them test the $145 mark. If we see some stability around 145, I would be a light buyer at those levels. Now, if we're going to continue to see weak sentiment in the market and Apple shows further downwards pressure, breaks through that $145 mark, we might see them hit the longer term support. Okay, the longer term support on Apple is the last place that we picked up the play. If you guys remember, at $125, then we took them up to $157 from that mark. So if they were to hit the longer term support after breaking that significant $145 mark, you might see Apple around $138, $137. But as I say, the market would really have to get turbulent to hit those levels. But I have significant interest if Apple does hit that longer term support at the $137, $138 mark. And I would be a buyer at those levels, as I say, for the longer term in the play. So I just wanted to give you guys a heads up on some significant price points and levels that I have, and just run you guys through a little bit of technical analysis. So as I say, we can get you vibrating on a higher frequency in this stock market game. So as we wrap this one up, my last message to you guys is to remember to go light on your buys, given the low market sentiment, and prices could come further down from these levels. And remember to have high levels of cash on standby so you can take advantage of opportunities when they come. So that wraps up for this one. If you've got any questions for me, drop them down below and I'll get back to you. On your way out, light up that comment section for me if you're new, join the movement, and I'll catch you guys on the next one.